Which entity structure should you choose? LLC, S Corporation, sole proprietor? Getting this wrong can cost you thousands in taxes, and most landscapers get it wrong. So let's fix that. I'm Jim Flouse. I've prepared thousands of tax returns for landscapers, hardscapers, lawn care services, and other self-employed contractors. Been doing it for 20 years. I'm licensed federally, meaning I'm authorized to practice in all 50 states before the IRS. So I know what I'm talking about. Hit the subscribe button so you get weekly tips on how to save thousands in taxes. Let's go. First of all, you can be a sole proprietor. Sole proprietors get that way by default. You simply don't choose anything else. 80% of landscapers are sole proprietors. It's very simple, but it's also very costly potentially because you pay self-employment tax on all your net income. In other words, you pay income tax plus 15% self-employment tax, meaning lots of dollars in taxes wasted just going to the IRS right out of your bank account. The second choice is an LLC, limited liability company, most popular choice today. It gives you great legal protection, hence the name limited liability company, but it doesn't do anything for you tax-wise. It does give you the protection legally should someone sue you, and it gives you great flexibility because you can choose how you want to be taxed. But if you don't choose, you default right back to sole proprietor, hence lots of self-employment tax. Third choice is S Corporation. S Corporation is a separate entity. You become an employee of the S Corporation. You don't have to change your legal structure. You can be an LLC, but you can elect S Corp status. That means you're taxed as an S Corp, but at the state offices, you're still a limited liability company. So what's all this mean? What it means is because you're paid as an employee, you're no longer self-employed. If you're no longer self-employed, you're not subject to self-employment tax. You will have to pay payroll tax on some W-2 wages, but you change the way you're paid. You're paid some of the money out of your business as an employee on a W-2. You're paid the rest of it as profits on the business as owner draws or distributions. Here's when you go with each of these types of choices. If you're just starting out in business, sole proprietor can be fine, particularly if you're just trying to figure out, am I viable? Will I survive? I'm just getting started. Let's see where this goes. But it can quickly mean you're going to pay too much in taxes. So as you grow, you'll want to become a limited liability company. At least you'll protect your legal liability and you'll position yourself later to change your tax structure. Finally, if you have net income, I say of $80,000 or more. Now, this is net, it's profit. It means your top line income less your expenses. So let's say your top line is $200,000, you've got $100,000 in expenses, that leaves $100,000 in profit. If your profit is $80,000, $100,000, it can mean huge benefits to you in terms of tax savings, but there's no broad rule that should apply to everyone's situation. If you see it on YouTube, you see it on TikTok, it can be great strategy, it can attract a lot of views, get a lot of clicks and likes, but it's not tax advice. You should talk to someone specifically about your situation to see whether the S Corp actually makes sense. In most cases it will, but I reserve the right to tell you otherwise. If you'd like to know more, type entity in the comments below. You and I can set up a conversation where we'll talk by phone, get a little better understanding of what your goals are, your business, your profit, and then you can decide what makes the most sense. I'm Jim Flouse. I hope this helped. Please click the subscribe button and we'll see you next time.